welcome to our inaugural LendX event. We've actually combined a few different Tearsheet events over the years. So LendX is all about data, lending, and credit, and where those intersect. And our first guest is Rodrigo Suarez, Chief Banking Innovation Officer at Piermont Bank. He was appointed to this position in March 2023, so relatively new. Previously served as head of innovation at Piermont. Rodrigo has 10 plus years of experience as a strategist in the financial services industry. Prior to Piermont in 2020, Rodrigo served as principal of INV Fintech, a startup accelerator in partnership with Fiserv and more than 20 financial institutions. And in that role, Rodrigo mentored multiple early stage companies, significantly expanded the program's corporate ecosystem, and supported both startups and incumbents, and they executed on mutually beneficial partnership opportunities. He has an MSE, BSE in Economic and Financial Systems Engineering from University of Pennsylvania, a BA in Economics from Penn. Welcome, Rodrigo.
Thank you, Zach. Thanks for having me.
And I'm really excited for our conversation because I think a few years ago, we wouldn't have had a conversation that combines the ecosystem building that's happening within lending. I love our concept about mutually beneficial partnerships within the BaaS ecosystem and how that can help banks and fintechs expand into lending. So my first question to you then is, what should banks look for in a potential fintech partner? And are there any business models, for example, that are more attractive than others?
Yeah, I think a lot of it depends on what the bank is looking to do. Different banks that are either already in the banking as a service and embedded finance space or looking to get into it should define what specifically they're looking to do. Those are very big spaces. So if you're looking to do consumer programs, or if you're looking to do commercial programs like those, even that high level distinction will lead you to look for different things in the partners that you work with, obviously. But just talking about like certain general characteristics, I think especially with how the market has evolved and the pressure both on banks and fintechs that are working together now, it's important to look for experienced teams that have domain expertise and that really understand what they're looking to do so that the partnership can be long-term sustainable. And I think on both sides, there should be an understanding of the challenges that are involved in executing a partnership between a bank and a fintech. On the bank side, I think understanding how fintechs work is important, and understanding that they have different culture, that they have a different way of launching products is very important. And on the fintech side, understanding that you're operating with a regulated institution is critical. That really sets the foundation to then think about what exactly you're going to be doing, especially for something that may eventually evolve to lending. Having that clear alignment from the start, I think, is critical.
Wow, I have to imagine that those first couple of partnerships at a bank that's new to banking as a service that they ink and execute with fintechs, it's a whole. These are two different worlds coming together. Can you talk about, I guess, conversely, what should a fintech look for in a banking partner? Because that's also totally necessary in terms of launching a program.
Yeah, well, I think it should also start with what the fintech is looking to do, right? So if a fintech is looking to launch a consumer like card program and eventually evolve that into a consumer lending partnership of sorts, I think it's important for the fintech to look for a bank that understands how to operate within that consumer space and that has experience doing not only what the fintech is looking to do at that point in time, but also experience with what the fintech is looking to potentially do later on. In our case, just to maybe go a little bit more specific on Piermont, we're really a commercial lender, not a consumer lender. So even though a lot of the work that we have done with fintechs is on the payments and banking side, I think where we have commercial use cases, there is definitely more alignment for us to potentially evolve that into a lending program later on. So fintechs that are looking for a bank that has that expertise would, hopefully look to us. But conversely, fintechs that are looking for expertise on, let's say, like an unsecured like consumer product would not necessarily look to us. I think there are banks that are going to do that much better than we can. So I think that's very important. But also, regardless of what the bank's focus is, I think a demonstrated track record of having done partnerships with fintechs is very important. To your point, like the first few ones are like tricky. There are a lot of obstacles along the way. So working with a bank that has done it, that understands how to overcome those challenges is also, I think, one of the things that would matter most if I were on the fintech side.
Yeah, that makes total sense. Working with a partner that's been there and done it before is definitely different if you were to compare that against a neophyte bank moving into space for the first time. So maybe we could talk about how these different components come together. Can you describe how like these relationships between banks and fintechs and the understanding of the banking and transactional components of a BaaS program can make that, can support like a move into lending?
Yeah, sure. So maybe to give you a little bit of context on how we started ourselves, we intentionally started with banking as a service and with a focus on payments and banking, like checking accounts, savings accounts, that sort of structure. But always with the intention of eventually evolving that into lending opportunities. And the reason why we did that is because when you launch a program that has all of the data that a banking as a service program, a debit card program would have, that positions you to eventually, think about opportunities to leverage that data for other things, including on the lending side. And we think of that in two different levels, or two different flavors, if you will. I think first there is like an opportunity for the bank to lend to the fintech as a commercial entity. So if you have data on the underlying card program and the revenues that the fintech is generating through its payments offering, or the deposit inflow that you're generating through additional like end user growth, that positions you as a bank to potentially lend to the fintech. And especially, in this environment, I think there is going to be more of a need for technology companies and fintech to look to banks that understand their business and that can lend to them. There's this other flavor, which is, how do you work with the fintech in partnership to lend to another user base? And along that, flavor, there are also a lot of things that you can use the underlying data for. And I think it all really boils down to like really understanding like certain nuances and the underlying end user segment that you're looking to potentially serve with data that you wouldn't necessarily have if you had not started with banking and payments under like a more traditional banking as a service model. So for us, it's really like, the first step to eventually do something that's going to be, at least in our opinion, much more involved and harder to do than just payments or accounts and whatnot.
I love that. And I think that underscores the value of data in these types of relationships. I'm just curious if we could double click on that. If a bank were to lend to that fintech, how do you see that in terms of aligning incentives, putting skin in the game in terms of running a successful program together?
Yeah, well, I think there's always skin in the game, whether the bank lends to the fintech or not, right? Because you're working very closely with a fintech to accomplish hopefully the same objective. And there's a lot of work that needs to be done by the bank and by the fintech to make sure that those interests are aligned and that risk is being managed appropriately. So like jumping from like a traditional partnership, if you will, to one where the bank is also lending to the fintech only increases that level of connectivity between the bank and the underlying fintech and the program. And I think it further aligns incentives if it's done correctly, because obviously if you're lending to a fintech, you want to see the underlying program succeed, right? So
Sure.
to the extent that you can be supportive of the fintech to keep generating that revenue, that growth, to be hitting those projections that you're tracking, and I think that would also help on the credit side if you're basing certain credit decisions on those milestones. So it's something obviously tricky and hard to accomplish, but I think if it's done correctly, it can both increase the difficulty in executing the partnership, but also potentially make it richer and more interesting for both the bank and the underlying program.
And I appreciate how you began that answer, Rodrigo, which was like, there's always skin in the game. I 100% agree. So that's a good segue, I guess, into our next, my next question about credit decisioning. You mentioned that, and how should banks and fintechs be looking? How should they be thinking about like technology solutions or partners to help them make better lending and credit decisioning?
So I think there are a number of things to look for, but primarily I think it's looking for the right tools to leverage the data that you have to accomplish the objective that you have. And I know that sounds very conceptual, right? But if you're looking to, for example, create a better underwriting model for a specific segment within the SMB space, I think the first thing that you should be looking at when it comes to working with the technology provider is a technology provider that has the ability to pull in all the data that you would need, that would supplement your existing data to help you fine tune and improve on a unique model that you're working on. So it's not only leveraging their existing expertise and their existing data or access to data, but also their ability to incorporate whatever additional data you have, and to allow you to be flexible with how you're building that model. And a lot of the use cases that we work with and the ones that I'm thinking through right now, like traditional underwriting models may not necessarily work to serve an underlying, end user base. So having that, like that approach to iterate, I think is very important in a vendor, both, on the fintech side or on the bank side, if the partnership is looking to do something unique and new.
Yeah, it sounds like it's almost like an intelligence layer on top of a fintech's own data already, like that you're just helping them make more sense of it. And that, is that right?
Yeah, I think it's that, but it's also, let me be a little bit more specific. So yeah, there's an intelligence layer on top of the data that the fintech may already have, but
Mhm.
I think you need to also be able to extract data that will complement that
I hear you.
data that you do have, right? So
It's
let's say
both
you have a
parts.
lot of transactional data. You may still need to pull in other, like even more traditional, like credit reporting data,
Mhm.
or if you're
Balance sheet stuff.
yeah, if you're targeting like a segment in the e-commerce space, like maybe, you can like also pull in like e-commerce data to enrich your models.
Mhm.
So that intelligence layer on top of what you have is important, but the ability to augment it with adjacent and complementary data is also very important.
Understood. So let's turn a little bit of focus on Piermont. It's not lost on me the challenge of a new bank coming in and creating an ecosystem around lending, particularly in the commercial space. So what does a relatively new digital bank like you guys, like Piermont, bring to potential BaaS ecosystem partnerships that maybe some of the more traditional banks don't? And how does lending play a role in all of that?
Yeah, sure. So there are a few things, but the most important one I think is the fact that we're relatively new ourselves. We, got our charter in 2019, and from the start, building a business that will enable us to do partnerships and have a robust ecosystem with fintechs and technology companies has been very important for us.
Mhm.
So there is really that cultural component that some other banks don't necessarily have, and also buy-in across all levels of the organization to do this and do it well. So that's where I think our focus is a little bit of a differentiator. But that aside, I think it's also looking at these partnerships in a holistic way, and not just looking at one isolated component. When we look at banking as a service as an example, we of course want to do the underlying banking or debit program correctly, but we also want to identify where we can be better partners to the fintech, and that's where like the lending piece that I mentioned comes into play. In many cases, we will be very well positioned to lend to the fintech, and to enable them to grow as a company and to accelerate that growth. And also because we have, an understanding of the underlying program, we can also, in certain cases, step in and structure a partnership around a potential credit product. So just to give you one concrete example, we work with a company called AngelList, mostly on the banking and payment side. But as we were working with them, we also realized that there is this intersection where they want to offer a capital call line of credit to some of their underlying funds. That's an area where we have expertise on. So we're partnering to also enable that capital call line of product through their platform. And that's really an example of how we can go from just a component of a broader partnership to eventually tackling a much richer set of problems. And some banks I think are very well positioned to do that, but others just look at some of those things in isolation and haven't put them together.
And I have to imagine that there's some positive complementary effects as well. So if you do that for AngelList and really you knock it out of the park, you figure that out, that is something you could offer across the platform as well, right? Does it work that way?
Yeah, I mean, I think the things that we're working on with AngelList are very unique to that specific program, but certain lessons and certain models, I think, can be replicated across other types of programs for sure.
Great. So there is value again in the experience level of the platform.
Yeah, for sure.
So we're getting near the end of our talk. I want to, I guess, maybe zoom out a little bit and ask you sort of your perspective, given where we are in the macroeconomic cycle, where you see sort of banking as a service, where the ecosystem is heading in the next 5 years, and do you expect to see more of those relationships that maybe began with banking and payments moving into lending over time?
Yeah, I mean, the short answer is that I do, but let me give you a little bit more of my perspective on how the broader space is evolving. I think we're really now entering like a new phase of banking as a service, or embedded finance and embedded banking. And what I think will be different is that in the last phase, or the last iteration of banking as a service, we saw a lot of very a lot of sort of models that were very product specific and product driven, but that were not necessarily solving like an underlying need. There was a thesis that they were solving potentially like a unique need for a given segment, but it turns out that segment maybe did not have like that differentiated of a need, and again, it was like just a very product centric approach to building in fintech. And right now, what I think is happening is there's a lot more awareness that the underlying value needs to be there first, and then you can think about how payments, how banking, how lending can enrich that platform's value. So AngelList is one example of that, right? AngelList's value does not depend on them being able to facilitate payments or do certain things in banking or offer like a capital call line through a partnership with us. They do a lot more than that, but all of those pieces fit nicely into their broader offering and make it even better. So I think that's what I expect the next phase of banking as a service and embedded finance to look like. And lending will definitely play a component, because when there's an adjacent banking or payments offering that will enrich the underlying product, I think the lending part of it, if you're able to leverage that data correctly, is a natural extension. And within those models where there's a broader offering and the broader product that already drives value from a specific user base, it will be a lot easier to evolve from banking and payments to lending.